Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 30th of April 2023. Yes, it's the last day of the month already. And we are providing our normal weekly update, which is a repeat of the weekly update published yesterday. So if you've listened to yesterday's, no need to listen further to today's. On Wednesday, the 3rd of May, we have Jerome Powell and the FOMC making its announcement on interest rates. And this is going to be a crucial time for equity markets, crypto markets, and precious metal markets. The reasons why? This is the purpose of this video. Now, before we look at the facts and figures, just a quick reminder, we've set up a second channel entitled Finances Do Matter, where we will be covering all aspects of finance and investment, as well as the latest banking news. If you haven't subscribed and wish to do so, we've placed a link in the description box below. Now let's look at the figures. Gold rose $7 last week, rising from $1,983 to $1,990, having been as high as 2009 and as low as 1975, a rise of just 0.3%. In sterling terms, gold finished the week at £1,585. That's down, actually, £11, showing the strength of sterling. And in euros, it closed at €1,808. That's unchanged. Silver fell 3 cents, falling from $25.09 to $25.06, having hit a high of $25.38 and a low of $24.52, a fall of only 0.03%. In sterling terms, silver closed at £19.99, just below £20. That's down 20 pence on the week. And in euros, it closed at 22.80 euros. That's down 0.07 euros. Virtually unchanged, really. The gold to silver ratio rose slightly from 79 to 1 to 79.4 to 1. Now, the difference between gold's high and low was just $34. And the difference between silver's high and low was just 86 cents. Now, this is what we said last week concerning our forecast. We expect gold to trade between $19.25 and $20.50 and silver to trade between $24 and $26, both of which occurred. In fact, the difference between gold and silver's high and low has been the closest, really, for many months jointly. Looking at other financials briefly, Bitcoin stands at $29,303. That's up $2,036. Equities were marginally higher for the week. Dow Jones closed at 34,098. That's up 290 points. The S&P 500 closed at 4,169. That's up 36 points. And the Nasdaq Composite closed at 12,226. That's up 154 points on the week. Oils were marginally lower. Brent crude closed at $80.33. That's down $1.33. And WTI crude closed at $76.78. That's down $1.09. The dollar index stands at 101.66. That's down just 0.16 points on the week. Now, in our weekend report last week, we predicted, quote, so once again, probably a boring week until we approach Friday, unquote. And this is how it turned out, save that even on Friday, it was essentially a non-event. The data expected during the week was not forecast to move the needle as far as traders' reactions were concerned, and even poorer GDP figures for Q1 than anticipated failed to gain much of a response. The important data was the PCE, or perhaps one should say the core PCE figures announced on Friday. The reason for that is that the core is what the Fed tends to follow, and that gives us an indication as to the inflation rate. And this came in broadly as expected for March at 0.3%, providing though a year-over-year rate of 4.6%, down just 0.1% for the same duration up to the previous month. This stickiness, for the want of a better term, will in our view guarantee that the Fed will raise rates by 0.25% or 25 basis points on Wednesday, even though we have manufacturing PMIs, factory orders, and the ADP employment report, and services PMIs being announced before that decision is broadcast. We also have the US employment report, or traditionally called the non-farm payrolls, which will be announced on Friday. But by then, the figures will be too late for traders who will have already responded to Wednesday's interest rate announcement. The potentially exciting news, though, is that traders believe this interest rate rise due on Wednesday, which will take the Fed funds rate to 5 to 5.25%, may indeed be the last for a while, as the Fed takes a breather for what will be, if it does rise on Wednesday, 10 consecutive interest rate increases. And the breather will be to see how they affect the economy and also wishing to avoid a recession. Now, this is perhaps supported or further borne out by Federal Reserve Bank of Atlanta President Raphael Bostic, stating in mid-April's interview on CNBC, quote, "One move more should be enough for us to then take a step back and see how our policy is flowing through the economy," unquote. We should also, though, not ignore the potential of further bank failures should rates continue to rise into the future, as we saw First Republic Bank losing more than half of its customer deposits, nearly $102 billion, as fears about more bank failures spread to other financial institutions, and this will no doubt caution the Fed's decision. So close attention will be paid to what Fed Chair Jerome Powell states on Wednesday, and whether he agrees that a pause may now be necessary. If he states this, then we can certainly see equity markets, crypto markets, and potentially gold and silver prices rise as the US dollar weakens, and possibly, not guaranteed, but possibly fall below that rather critical 100 index mark. Our suspicion is that rate increases may indeed pause, but Powell will threaten the use of rising rates if inflation is not combated, but meanwhile will still in the background invoke various credit tightening measures as an alternative to rate rises, thereby having a similar effect of dampening down demand in the economy. We also have to take into account the debt ceiling debacle in the United States. Whilst we all know Congress will ultimately authorize an increase, political brinkmanship will be played, thereby perhaps adding a fillip to precious metal prices until the uncertainty is over. On the opposite side of the scale, however, is that we are now beginning to enter the quiet season for precious metal prices, as people tend to start preparing for holidays and breaks as the weather improves and summer approaches. This normally tends to deviate investors' minds away until we begin to reach September and October again. So, with this in mind, we can expect wider margins for gold and silver this week, simply because of what's being announced, certainly compared with last week, and hopefully more excitement in the markets. Therefore, our forecast for this coming week is exactly the same as it was for last week. We expect to see gold trade between $1,925 and $2,050, with $1,900 and $2,075 as outliers, and silver to trade between $24 and $26, with $23.50 and $26.50 as outliers. Now, before we go, just a reminder that we've placed our link in the description box below for our Finances Do Matter channel, where amongst the 55 plus videos we have created, we cover also a weekly update. That link is in the description box and the comment section. So tell us, please share your thoughts, what you think is going to happen to gold and silver prices this week. And meanwhile, we thank you for listening. We'd appreciate it if you would give us a thumbs up, subscribe, and press the bell sign. And of course, as always, we wish you a safe and enjoyable weekend. And most certainly this coming week, a prosperous, very prosperous week ahead.